Mario Draghi will never know the thrill of raising rates. As he nears the end of his term, the European Central Bank president is instead having to launch a new stimulus as the eurozone slows. Speaking in Frankfurt, Mr. Draghi warned of continued weakness and pervasive uncertainty.
Basically, our actions increase the resilience of the eurozone economy and so make us confident, keep us confident that convergence to a sustainable rate of inflation, our objective, will happen.
Now, markets in Europe were all in the red after the ECB's surprise. Italy and Spain were lower. It was the bank stocks that led the way down. The euro is down against the dollar, having hit a 4-month low. So the ECB is once again bringing out the punch bowl, trying to keep the economic party going. And they're doing so in the face of the global financial crisis. Central banks kicked off a wave of unprecedented stimulus. If you look at just what happened, the way in which rates went to zero, an entire alphabet soup of different plans on both sides of the Atlantic. Last year, a full decade after the crisis, the stimulus punch bowl was finally emptied. In December, the ECB was the last major central bank to sunset its emergency bond buying programme. 3 months later, Mario Draghi is having to return. After years of criticism for moving too slowly, he's the first central banker to take action in the face of a new economic slowdown. You remember back in 2012, Draghi promised to do whatever it takes.
Within our mandate, the ECB is ready to do whatever it takes to preserve the euro. And believe me, it will be enough.
Whatever it takes, well, it will be enough. Will it be enough? Carsten Brzeski is the chief economist at ING, joining me from Frankfurt tonight. Why is the situation so bad that the ECB needs to be loosening monetary policy rather than just remaining neutral? Is it that bad?
No, the situation is not that bad. The only thing is it is uncertainty. The word we've heard every day all over the world, all over financial markets. And this is why the ECB, I wouldn't even call this adding extra easing to the economy. It is more that they extend the current level of easing for a far longer period than we previously thought. So therefore, it was also a bit of a balancing act for Mario Draghi. He tried to get ahead of the curve, but obviously if he does too much, it also looks a bit like panic.
Right, but the fact he has to do it at all, the fact that 10 years on, with rates already at just about zero, he cannot simply say there is enough accommodation in the system.
Well, I think he has to continue. I think the bigger question is when you look along the line in the coming years, so are we not moving towards a Japanese situation in the Eurozone? And probably the answer is yes. So what we do see right now is, yes, Mario Draghi and the ECB will always do whatever it takes to stimulate the Eurozone economy, to let the euro survive. But they cannot do it on their own. What they do need is support by governments, by structural policies, by fiscal policies. And I think what, call this the last trick of Mario Draghi, because if we really were to go into a severe downturn in the Eurozone, the ECB would stand there empty-handed.
Well, that's where they could do another round of bond buying, but the jury is slowly coming back that that's not as effective, and certainly not on the 3rd, 4th or 5th round. What is causing this slowdown, this malaise? Obviously, Italy has a banking crisis on its doorstep, but what else is causing such woes in the eurozone?
There are a couple of one-off factors, temporary factors, especially in the German auto industry, in German manufacturing towards the end of last year. We also had issues about the oil price, that the drop in global oil prices was not passed through to consumers in the Eurozone. Then we have the Italian story, which probably was also distorted by the policies of the new government. And what everyone is currently chewing on is the question, is this really temporary? Will these one-off factors disappear, and will we see a gradual rebound in the eurozone economy, or is there more at hand? And more could be the slowdown in China, the ongoing trade conflict between the US and China, and Brexit.
Let me invite you, sir, finally, to answer your own question. Is this enough, or will more be required, in your view?
In my view, this is enough, because I think we have a very strong domestic economy in the eurozone. Investment, private consumption, and also government consumption should be enough to lead to a gradual rebound in the eurozone economy towards the summer this year, which means what the ECB did today should be enough to put a floor under uncertainty and the risks, and that we finally see a gradual rebound in the course of this year.
Good to see you. Thank you, sir. We much appreciate staying up late from Frankfurt tonight to talk to us.